Good evening, everybody. This is James Romelli with Alpha Shark Trading. I want to talk a little bit about trading deep in the money calls to avoid stop losses. Now, I talk a lot about why I think options are always going to provide me a better risk versus reward setup and a more capital efficient way to express any type of view in the stock market that I'm trying to express. So let's take a look here at the SPY and let's talk about a little bit of a hypothetical scenario here is what if I was long the SPY or long the market here before the little bit of a pullback or correction that we've had over the past 2 weeks here? What would have happened in my positions if I was long stock, and what would have happened in my positions if I was long the options? Now, if I was long stock here, and I had a long-term holding period, I may have a stop loss somewhere in place. And what happens when markets slam lower like this is we get these big gaps, and the stop losses that I have in place might not be as secure as I might think they are. If I have a stop loss in place here, in this example, if I was long at 197.5 and I had a stop loss in place at 190, well, when we open the next day at 187, well, hey, it doesn't matter that my 190 stop was there. I'm going to get filled at 187, and I'm going to get a much worse fill than I thought I ever could. I'm going to lose more. Now, anyone who was long deep in the money calls, they may have seen their position go to zero in a similar move like this, but they weren't stopped out. They stayed in the position and then were able to participate in the recovery that we had here. Now, I don't think that, I'm not necessarily saying that I think the market is going to go higher here, but if I did and I wanted to get long the SPY, I would never ever want to buy stock. What I would do is I would look for deep in the money calls as a stock replacement strategy, and I can take a look at longer dated options, and what I'm looking for is something that has around a 75 delta. So looking at this line here, somewhere in the 181 call area, which is about 14 points in the money, I can get calls that have around a 75 delta for about $18.30. So it's a little bit of a piece of premium over parity, but I get that staying power, and it's going to cost me much, much less than it would to buy the shares outright, even if I'm buying them on margin. So the 75 delta means it's going to behave very much like a stock position. It also means that I have some upside in terms of that delta. I do have a little bit of gamma that I'm long, even though I'm deep in the money. As we get closer and closer to expiration, this will become more and more closer to a delta 100 position. So it'll be just like having stock, barring any other movements in the stock and all other things held equal. So it's a completely different way to look at this than buying the outright stock, and it's far more capital efficient. I hope everybody watches this and realizes that the staying power aspect isn't something that I can quantify, but it is one of the most beneficial aspects of trading deep in the money options. So thank you guys very much. Everyone have a fantastic evening, and as always, happy trading.